It's always so annoying to do it the other way. Okay. So we were in section 6.2, I believe. And it's page 15. I have the chat open for you guys if anyone needs or prefers to use the chat over talking with me, but here we go. Calculating the overtime for piecework. Piecework employees, like other workers, are paid time and a half for overtime. It is common for the overtime rate to be 1.5 times the regular rate per price. So, just like when you have a regular hourly job and you get paid time and a half, if you work over 8 hours or if you work over 40 hours in a week and you are getting paid per unit, then any overtime you do has an overtime unit rate. But again, remember, it's also going to be compared to the normal overtime. So if you're not as productive, then you're going to make whichever one is the more money. Okay, so let's go ahead and read through this example. John fulfills order shipments at a large distribution center. He pulls items from stacks of inventory before handing orders to an operator who shrink wraps the order and puts an address label on it. John is paid $1.85 per order fulfilled during regular time and time and a half for all orders filled during overtime. Find his gross earnings for a week in which he fulfilled 293 orders during regular time and 36 orders during overtime. Gross earnings, earnings at regular piece rate plus earnings at overtime piece rate. So what we took from John's statement is that the first 293 pieces, he's getting paid at his regular rate, $1.85. Once he hits into his overtime, he is making the $1.85 times 1.5 times the 36 pieces that he went over. How did they tell us that? Okay, so yes, you need to look at the, if I were you guys, I know you can't like print every single thing because I know some of you might not have printers, but I would write down the key parts and then I would use highlighters. I use highlighters all the time, and I would have regular time be one highlighter color and overtime be another, so that you kind of try to keep that separated. Okay. All right. So once you figure out your piece rates, you go ahead and multiply and then add them. So for just that day, he made $641.95, making me wonder if maybe working at an assembly line is probably a better option. Except, of course, I love my jobs even if they stress me out. All right. Questions on how to do a piece rate. Okay. I'm going to give people who take notes by hand time to write that out. So all right, a commission rate pays a salesperson either a fixed percent of sales or a fixed amount per item sold. Commissions are designed to produce maximum output from the salesperson since pay is directly dependent on the sales. I think I told you guys last class, you can have a commission sales or a commission inclusive job, but before you sign on any dotted line, unless you have a secondary income coming into your house either by yourself, as in this would be a second part-time job, or, you know, you have a partner, whatever the situation might be. You want to only take a commission job if it has a base salary, and a base salary that you can actually live with, okay? There are a lot of jobs out there that will try and get you to see that doing a commission only job can be completely beneficial to you. I would not recommend a commission based job, but then again, that's me. So someone else might have another experience with that. Okay, find the gross earnings using commission rate times sales. Straight commission, the salesperson is paid a fixed percent of sales. Gross earnings is equal to the commission rate times the amount of sales. Okay, so I'm more than assuming that they're going to give us an example. Okay. Before the commission is calculated, any returns from customers or any allowances such as discounts must be subtracted from the sales. Okay, so pay attention to that part. You have to basically figure out your overall amount of sales. So no discounts can be included. No returns can be included. It's not like you can inflate that sale amount and then expect to get the same gross earnings. All right. Whoever's in charge of your payroll for that company will always subtract out the returns and the discounts before they take your amount of sales and multiply it by your commission rate. So again, if you're going to have this kind of job, you have to always be prepared to figure out what indeed your earnings are going to be. All right, here's our example. Amanda, a food supplements sales rep, had sales of $10,230 one month, with returns and allowances making a total of $1,120. If her commission rate is 12%, find her gross earnings. So here you can see, okay, here you can see that they took the sales that Amanda had, subtracted out the allowances. Now, the allowances could have come from unhappy customers that she sold food supplements to, and so they returned it. She could have given out some discounts to make the sale, so that would have been chunked into that. And then once they found that difference, then they multiplied by the decimal version of the 12%, and they have a total of the money that Amanda is taking home. Now, keep in mind, guys, this is for 1 month. So for 1 month, Amanda earned $1,093.20. Okay. If you can calculate what she would be bringing home per week then by dividing that by 4. So she's only making $273.30 a week. All right. And she's not getting that until the following month. Okay. So she's going to have to be constantly saving. And then here's the other thing. When you do your taxes are a little bit different when you have a commission-based job. Okay. So I'm sure we're going to get to that in another chapter. All right. Determine a commission using the variable commission rate. Oh no, what happened? I think I scrolled on my mouse. Sliding scale or variable commission is a method of pay designed to retain top producing salespeople. A higher rate of commission is paid as sales get larger and larger. So probably a good example of this would be car salesmen. Once you hit your quota so many times, they might bump your rate of commission. maybe insurance brokers, like as you get more and more people signing up for your insurance, they might increase your rate of commission. I think there are some other kinds of brokers too. I don't really know a lot about that world, but okay. So Maureen O'Connor sells food and bakery products to businesses such as Starbucks and is paid as follows based on monthly sales. Okay, up to $10,000, she earns a 6% commission. From $10,001 to $20,000 is an 8% commission, and from $20,001 and up is 9% commission. Okay, so excuse me. All right, we want to find O'Connor's earning if she has sales of 32,768 during a 2-week interval. So first things first, realize that this is based on monthly sales and we're being given a 2-week interval. So no matter what, where would Maureen O'Connor fall in this chart? What's her commission rate going to be? Based on the sales they're giving us, what's her commission rate going to be?
9%.
Very good, Anna. Thank you. Okay, so let's look at what they're having us do. So I want you guys to check out. So she works up to 9%. And what we need to always remember is, remember when we had that other chart, I think that showed us the pieces? You have to subtract. So her first $10,000 is going to be at 6%. The next $10,000 is going to be at 8%. And then the remaining is going to be at 9%. So it was kind of like a trick question. But yes, eventually she has earned enough just within the first 2 weeks that she's going to be at 9%. Now, I believe that means that the following 2 weeks, no matter what she earns there, should be at the 9%. I would be 95% correct on that. Basically what they'll do is they'll do a whole new thing. They'll get her monthly sales, subtract the 10,000, subtract the 10,000, and then all the rest should be at 9%. But this is an example where this person could be completely fine doing commission work. So, I mean, like I said, it's just kind of all based on what each person is comfortable. I would be comfortable with that amount monthly, and she made that in just 2 weeks. I don't even think I make that in a month. So, I mean, that would be super nice for me. But again, I want you guys to remember that this person's going to have to take her own taxes out. So she either needs to pay her taxes quarterly, or she needs to figure out her taxes every quarter and basically have a savings account where she just funnels her money in that she's going to have to send into the IRS every year. All right. Find the gross earnings with a salary plus commission. So this is the absolute best option for you if you are thinking about a career that is involving some form of commission-based sales. You want to have this salary plus commission. That means that even if you don't hit a quota, even if you aren't the most productive, or if something's going on during that month that your sales are super down, you still are taking home some form of a salary. Okay. So salary plus commission, the salesperson is paid a fixed sum per pay period plus a commission on all sales. Now remember, the returns and the discounts still have to be taken out. Okay. So your gross earnings are found by fixed amount per pay period plus the amount earned on commission. Draw in income that is an earning advance, which is a loan against future commissions. If you guys are going into some kind of field where commissions is something you're going to be doing, I extremely recommend that you never ever do this, because you never know if you're going to make the commissions that you need to pay off such a loan. Okay. If you're going to do that, I would look at all of your past commission sales and only ever take half of what you know you can make in a normal setting of time. All right. Any questions on this kind of definition or situation? Okay. Those of you that take written notes, you're good to go? Cool. All right. Let's look at example 8. Jamie Bailey is paid $450 per week by Beverly's Creations plus 3% on all sales over 500. Find his gross earnings for a week with sales of $8,255. So there's the weekly salary of $450. And then there's the sales above 500. So the first thing you guys have to realize here is that we have to take the sales that he made and we need to subtract out 500. That's what they're doing right here. Then they're going to take that remainder of sales and they're going to multiply it by 0.03 for our 3%. And then they'll go ahead and do the addition of the weekly salary plus the sales, giving Jamie a total earnings of $682.65 for 1 week. That's a fantastic take-home amount. Although, again, I can't tell you if taxes are being taken out or not. My thoughts would be that they would not be. Okay. Okay. All right. So it looks like this is the end of 6.2. Do I have any questions on 6.2? Okay. 6.3, we're going to continue with payroll. Social Security, Medicare, and other taxes. I don't know if we'll make it through this whole section. I will do my best. But again, this would be the section that if I were to have questions, this would be it. All right. We're going to understand the FICA, find FICA tax and Medicare tax, determine the FICA tax and the Medicare tax paid by a self-employed person, and find state disability insurance deductions. When it says understand FICA there, we're going to do our best, and I'm going to do my best to explain it. But I think we all talked on day one how much I feel that taxes are a voodoo science and math. So we will do our best and we will get you through the course aspect of it. But down the road, please don't email me and ask if I understand taxes, because the answer will always be no. No, I don't understand taxes. It is a very weird animal. All right. So the Federal Insurance Contributions Act. It was passed into law in the 1930s in the middle of the Great Depression. It is now called Social Security, and originally designed to give monthly benefits to retired workers and their survivors. I guess if you did have to know one of them, this would be it. Employee pays 6.2% of income to FICA. Employee pays 1.45% to Medicare. This is definitely what you want to write down. Employer pays the same rate, matching dollar for dollar all employee contributions. Each employee must have a Social Security card. All money set aside is credited to employee's account according to the Social Security number. Okay. All employees under age 25 receive a statement annually 3 months before their birthday showing how Social Security fits into their future. They can request for earnings and benefits estimate statement, check carefully, correct errors, and then there's a phone number and a web address. Guys, I haven't been 25 for a minute, but I don't remember at all receiving this. I don't know if I just kind of threw it away or my parents may have taken care of it, or maybe I didn't get one, but I don't remember getting that at all. So, again, I also don't feel like it's something you really need to know. I'm not going to like quiz you or ask you what age are you that you should receive an annual statement. Not going to really ask you anything about that. Okay. So the table shows the tax rates and the maximum earnings on which Social Security and Medicare taxes are paid. This kind of shows you the history of it, like as it changed. The rates. Employee earnings subject to the tax, Medicare tax rate, employee earnings subject to tax. So I think this year part is like when people were born. So like if someone was born in 1950, then this is the rate that they're going to have to pay. And then it kind of goes down from there, if that makes sense. Okay. And I think it's because the people born later will get more. I told you guys I don't understand it. But okay. Understand. Oops. Okay, use the following for all examples and exercises. Okay, so write that down. If you're asked for Social Security tax, you want to take 6.2% times earnings up to 130,000. Once you hit 130,000 for the income, you will have to use a different amount. Now, as far as the majority of us are concerned, we will probably never have to pay anything higher than 6.2%. And then Medicare tax doesn't change. It's just 1.45% of the total earnings. All right. Find the maximum FICA tax paid by an employee in 1 year. So since they already gave the answer down there, there's no point in me working it out for you. Employee earning 130,000 during the first 10 months of the year pays no more Social Security tax on any additional earnings. The maximum Social Security tax in 1 year will be $8,060. That's if you make the high end, okay? The majority of us are not seeing that number. Okay. Medicare taxes paid on all earnings. So the total earnings are multiplied by 1.45%. That is just repeating. I don't know why. Find FICA tax and Medicare tax. When finding the amounts to be withheld for Social Security tax and Medicare tax, the employer must use the current rates and the current maximum earnings amount. Okay. Again, if you are on an independent contractor or some other form where you're going to end up with a 1099 at the end of the year, you are not getting your taxes taken out. So that means all of this has to be paid and figured out by you at the end of the year. Help Jessica Ramirez, the manager at a local Panera Bread, find the Social Security and Medicare tax that must be withheld from the weekly earnings of 2 employees. All right. Somebody tell me what we have to do. So let's figure out the FICA first.
Would you multiply them by 6.2%?
Yep. So 0.62. Or 0.062, sorry, times your 362.40. That'll give you the first person's. Okay. Let's figure those out. And this is more of like where the majority of the people that I know are in. Okay, so the first one is going to get us $22.47 for the FICA, which I believe on the tax forms would just end up being, so like on your W-2 and on your pay stub, you're going to see $22.47, but at the end of the year, they always round down or up depending upon the cents. They never have cents included typically. All right, and the other one was 29.02, and again, that would just be 29 if it was on the W-2. Okay. And again, you need to keep in mind that not only are the 2 employees paying that, but then Panera Bread is also paying that. All right, Medicare. And if my writing's terrible, don't worry, you can see it again on the next page. So. What do you guys think you have to do to find the Medicare?
Multiply it by 1.45%.
Mm-hmm. So 0.0145. 0.0145. And we end up with so you end up with 5.25, which would just be on the W-2 $5, and the other one is going to be $6.79, which that one would actually round up to $7 on the W-2. On your regular pay stub, it's just going to take out the $6.79. Okay. Questions on that? Let me go ahead and clear it so we can look at the nicer writing. Okay, you can see that we were correct on both. So kudos to you guys. Questions on finding that? No? Okay. That's basically what you guys will have to do from this section. And it can get complicated, and it definitely does, but if you can have that kind of down pat, then you are good there. Shannon has earned $127,634.05 so far this year. Her gross earnings for the current pay period are $5,224.03. Find her Social Security tax. So the first thing we need to see is what amount do we care about when it comes to Social Security? What was that cutoff amount?
$130,000.
Yes. So if this person earns more in the first 10 months of the year than 130,000, then the first 130,000 will be taken at the 0.62, but then the remainder of it will have to be taxed at a higher amount. Okay, and we would have to look at that in the table. Okay, and they'll probably show us that. So the question I have for you is, does Shannon earn more than 130,000 given the information we're told here?
No.
Okay, so what you guys want to do is the question at this point is, has Shannon earned more than 130,000 to this point? Now, granted, we don't know if that's the first 10 months or not, but at this point, has she hit the max?
Yes.
Yes. So now what we need to do is, we know that the first 130,000 we're going to multiply by the 0.062, but we are also going to have to figure out at a higher amount this, so 2,858.08 is what she's earned over the $130,000 mark. So that amount will be multiplied at a higher tax bracket. Okay. So I'm going to go ahead and clear this because I know they're going to show you it on the next slide. Okay. Well, that didn't look like anything they gave us in the first set. Okay. That's weird. All right, let's look at this. So this is where I tell you guys, and I'll say it probably so much that you'll just roll your eyes at some point. Taxes are weird. Now, we just followed every rule they told us, right? So in theory, we should have matched the answer they got. But instead, they're telling us that Social Security tax is paid only on the first 130,000, which we agreed with. We figured that part out. Now they're telling us subtract earnings to date from 115,000 to find the amount subject to Social Security tax during the current pay period. And they didn't even do that. Okay. So apparently all they care about here is knowing how much you're going to multiply for the 6.2%. If anyone has any more clarity on this, I would be very happy to hear it. I don't even see how they use the 115,000. I disagree with. Don't know. I'm going to read chapter 6. I suggest all of you also read through chapter 6. I will also rewatch the videos, but I don't think the videos really help in terms of understanding this stuff. They basically just walk you through examples. I'm not wrong here, right? You guys do you guys see where they're using the 115,000? No. So it's like they took two different problems and squished them together on us. All right. If you come up to an issue on Pearson, email me and we'll work through that problem together, okay? Sometimes on Pearson, they give you the little tables. So if they give you a table, make sure you use the table. I've also have all of the tables in one area on Canvas, and then I also have the tables listed by chapter when we're supposed to use them. So they're on there twice, basically. As far as this example goes, I would go through the homework and see if you can find a better understanding of it, because I pretty much disagree with that. But okay. Determine the FICA tax and the Medicare tax paid by a self-employed person. People who are self-employed pay higher Social Security tax and Medicare taxes. There's no employer to match the employee contribution, so that is why they are charged at a higher rate. That is not the case with independent contractors. Even though there's no employer to match, they're not charged at a higher rate. Self-employed persons pay a rate that is double that of the normal employee. 12.4% is what they use for Social Security, and 2.9% is the adjusted earnings for Medicare tax. Again, this is because there is no one matching them, and of course the IRS has to have all of their money. Is what it is, I guess. All right, so definitely pay attention to the different kinds of situations that Pearson's going to throw at you. Here's an example. Find the Social Security tax and the Medicare tax paid by Tashawn Williams, a self-employed web designer who had adjusted earnings of $53,820 this year. So do you guys see why it is intelligent to do quarterly taxes if you have to do everything by yourself? This is how much just in taxes, like the taxes that we normally get taken out every pay period. This is how much this person is paying in 1 year, and they're paying it all at the end. So if they weren't good with their money, if they didn't, pay attention and know that this was coming, they're getting charged 673.68 plus 1560.78. They have to pay $8,234.46. So $8,234 in February, March, whenever they decide to do their taxes the next year. I don't know about you guys, but I'd be a little bit mad and salty if I had to pay over $8,000 for taxes. So at least if you take that let's just 8,200, make it easier on ourselves and divide it by 4. You're looking at 4 times a year, $2,000, roughly. I guess that's a little bit more manageable, but if it were me, I wouldn't want to do it at all. But then again, most of us don't want to pay taxes. So questions on if they tell you that the person is self-employed. Remember that you just want them to be paying double. Okay. If it helps you remember, if you see self-employed, then they're their own employer. So they have to basically pay twice. They're paying as the employee and they're paying as the employer. So you could find it separately and then add it up, but eventually it's going to end up working out to be the same. All right. Find state disability insurance deductions. Many states have a state disability insurance program. So on your payroll stubs and on your W-2s at the end of the year, it will say SDI. That stands for your state disability insurance. You don't have a choice whether you are disabled, know someone that's disabled, or whatever the situation might be. Just like we don't have a choice when it comes to school tax, you must pay it, period, end of discussion. Doesn't matter how salty it makes you, you have to pay it. Qualifying employees must pay a portion of their earnings to the program. If an employee is injured and unable to work, the program pays the employee during the period of disability. The tax rate and amount subject to tax vary widely state by state. So if anyone's paid attention to their payroll stubs, you'll also see that there's an unemployment part. Everyone puts into that because at some point, if you need unemployment, that's literally why you've put into it. Okay. Again, you don't really have a choice. So even if you don't end up ever using unemployment, which I feel like at this point in 2021, thanks largely to last year, the majority of people have now had to use unemployment. Okay. We will use an SDI deduction of 1% of gross earnings on the first $31,800 earned in a year. We assume no SDI deductions on earnings above this amount. Okay, so basically, no matter how much someone makes, if they make more than $31,800, you're just going to charge $31.80, basically. Okay, so let's look at this example 4. Find the state disability insurance deduction for an employee at Comet Auto Parts with gross earnings of $418 this pay period. The SDI rate is 1% and the employee has not earned $31,800 this year. It's literally 1%. You move the decimal point. Okay. $4.18. All right. Example 2 is a little bit different. Ms. Perkins has earned $29,960 so far this year. Find the SDI deduction if gross earnings this pay period are $2,872. Use the SDI rate of 1% on the first $38,800 or $31,800. The SDI deduction will be taken on the $1,840 of the current earnings. So they subtracted from the $31,800 and they got the $1,840. Now, here's what's confusing on this side of things. 2872. From the math side world, so like if I wasn't teaching you this class and I had to figure this out for myself, my brain tells me to take this amount and subtract this amount and I end up with 1032. So again, I don't know how many different ways I can tell you that this stuff is just tricky and it's difficult, and it doesn't make most sense. Mathematically, they do things weird. So $18.40 is what the person is going to be charged. All right. I guess what you should take away from this is that don't try to overthink it. If you're told they earned something, subtract it from what what the cap is, and then figure out the 1% or whatever percentage from that difference. Okay. Do not try to overthink this. Do not try to think like a mathematician. Just think like someone who doesn't really go past black and white. That's all I got for you. Any questions on this? This is the last slide for 6.3. No? Okay. So let me start. Let me start 6.4 for you. I don't know. I don't think we'll finish it, but we will do our best. Okay. 6.4, income tax withholding. All right. You don't have to worry about writing this part down. We're going to understand the employee's withholding allowance certificate, find the federal withholding using the wage bracket method, find the federal withholding tax using the percentage method, and find the state tax holding, the state withholding tax using the state income tax rate, find net pay when given gross wages, taxes, and other deductions, find the quarterly amount owed to the Internal Revenue Service, and understand additional employer responsibilities and employee benefits. Again, by understanding, I mean that I will present it to you, we can discuss it, and we will try to figure out to the best of our abilities. All right. Personal income tax is the largest single source of money for the federal government. Law requires that the bulk of the tax owed by an individual be paid as the income is earned. Again, this is meaning that if you filled out a W-4 and your employer is actually taking out your taxes, then these statements are true. Employers must deduct money from the gross earnings of almost every employee, called income tax withholdings, sent periodically to the IRS. By periodically, they should be being sent every pay period. I guess if they're not, then maybe your employer is fine. Maybe your employer is fine sending it maybe monthly or quarterly. I don't know. Okay. The IRS has an electronic funds transfer payment system called EFTPS that allows employers to transfer these funds electronically. The amount of money withheld from each employee depends on several factors, including marital status, number of withholding allowances, and income. Marital status, generally, the withholding tax for a married person is less than the withholding tax for a single person making the same income. Can we all take a guess why? Mine will also be a guess, but I'll tell you my assumption. My assumption is that since both people in the marriage will be paying into the withholding tax, then obviously a single person must pay more to make up for the fact that they do not have a second person. It all comes down to the IRS getting all their money from everyone as much as they possibly can. Okay. Understand the employee's withholding allowance certificate. Employee must fill a W-4 form with the employer. If you have not filled out a W-4 form with your employer, they are not taking out taxes, which means you will get a 1099 at the end of the year and you will have to figure it out yourself. States the number of withholding allowances being claimed. The majority of this is going to be a 0 or a 1 for you. If you put a 0 down, they take the least, I think they take the most out when you put a 0 and the least out if you put, the more dependents you have, the least money they take out, but then you owe more at the end of the year. Additional information so employer can withhold the proper amount of income tax. Here is an example of a W-4. It is not the entirety of it. Okay, it's just kind of giving you an example. A W-4 form is usually completed when a person starts a new job. A married person with 3 children normally claims 5 allowances, 1 for each employee and spouse, 1 for each for the employee and spouse, and 1 for each child. I'm telling you guys right now, never ever do that. The more you claim in that section, you will just owe more and more at the end of the year. However, if both spouses are employed, each may claim himself or herself. Number of allowances may be raised if an employee has been receiving a refund of income taxes. Number may be lowered if the employee has had a balance due in previous tax years. W-4 form has instructions to help determine the proper number of allowances. So I'm pretty sure growing up, my dad always told me you put a 0 or a 1. That's it. If you put a 0 down, then you should be getting back the majority, like you should get a refund almost every time. Okay, some people enjoy receiving a tax refund when filling their income tax returns, so they claim fewer allowances, having more withheld from each check. This is what I strongly advise all of you, especially if you're single, to do. Even if you're not single, I probably will never claim anybody because I want them to always take out my tax money because I hate owing the government directly. Other individuals prefer to receive more of their income each pay period, so they claim the maximum number of allowances to which they are entitled. Do not do that. You just end up having to pay more at the end of the year. The exact number of allowances must be claimed when the income tax return is filed. Amount of gross earnings withholding tax is found on the basis of the gross earnings per pay period. Income tax withholding is applied to all earnings, not just earnings up to a certain amount as with Social Security. Generally, the higher a person's gross earnings, the more withholding tax is paid. Internal Revenue Service supplies withholding tax tables to be used with the wage bracket method. Tables are extensive, covering weekly, bi-weekly, semi-monthly, monthly, and daily pay periods. Okay, so this table method, if Pearson's asking you to use it, they will provide it for you. It's typically a pop-up that you have to click on, but they give it to you. You also have a copy on Canvas that you can print out, and I do recommend printing it out. I also recommend maybe having it laminated so you can highlight it during the different problems. Benito Flores works for Apple. He is single and claims no withholding allowances since he prefers to get money back from the government when filing his income tax return. This choice will increase the amount withheld from his paycheck every week. Use the wage bracket method to find his withholding tax for a 25-hour work week in which his gross earnings were $368. Use the table for, and this is the stuff that you want to pay attention to, single person weekly payroll. The earnings of 368 are found in the row of at least 360, but less than 370. You'll understand that in a minute. Look in that row and the column for 0 withholding allowances to find $39, which is the amount that should be withheld. Okay, so they obviously didn't want to show you the table. Hold on. Federal withholding tax table, single person, weekly. Okay. All right, can you guys kind of see that? I ignore this, the robot. So here, number allowances is 0. They made between 260 and whatever. And then you scroll over. So see, this isn't even the right thing. All right. When you are going through your homework, you will get to use the tables. You can check these examples in the tables. All right, so this one is stating Pat Roll is married, claims 3 holding allowances, and has a monthly gross of $2,780.50. Find her withholding tax using the wage bracket method. Okay, again, you have to use the table. You're going to look for monthly payroll. You're going to look for where their earnings fall. You're going to look for three withholding allowances, and then you'll find the withholding that they are going to take out. And then you can also see, like, had she claimed 5 withholding allowances, then they would have only taken out $38. Do we see here the difference between allowances? That's a big difference between 106 and 38. Okay, that person's going to owe a lot of money at the end of the year. Many companies today prefer to use the percentage method to determine the federal withholding tax. Percentage method does not require the several pages of tables needed with the wage bracket method. More easily adapted to computer applications in the processing of payrolls. You still have to know how to do the table. You don't get the choice between the two. You have to do the table and you have to do this option as well. Okay, step 1, multiply the number of withholding allowances by the amount for one withholding allowance from the table. Step 2, subtract the amount found in step 1 from the gross earnings. Step 3, find the appropriate table for the percentage method of withholding and then find the correct row. Step 4, allow the directions in the table to find the tax to be withheld. All right. So this is more of what it will look like on Pearson. All right, you still have to work with the table, but when you're lucky, some of the questions will give it to you like this. So then you just have to take the number of withholding once you find which kind of pay period and multiply it by 1 withholding. Okay. The problems are a lot nicer. So Sarah, at Starbucks is married, claims 2 withholding allowances and had a weekly gross earnings of $690 1 week. Use the percentage method to find the withholding tax. From the table, the amount for 1 withholding weekly is $77.90. Multiply that by the 2, so then she's getting $155.80 withheld. You then take the weekly the weekly earnings, subtract what would be withheld. So use table 1B for weekly payroll per period, person married, go to over 521 but not over 1630. And then you kind of follow through with these steps. So she's only getting $37.68 withheld. So basically, again, you're looking at that big of a difference. All right. Yeah, it might seem like a lot. And yeah, you probably would like to have only $37.68 being taken out as opposed to the $155.80. But again, guys, she has to pay this back at some point. It's not like she can just never pay it back. It's not how taxes work. Many states and cities have income tax, and this varies from state to state. States that have no income tax are Alaska, Florida, Nevada, South Dakota, Texas, Washington, and Wyoming. Some have a flat tax rate, which is the percent of the income, and others use tables and rates as high as 12.3%. I'm going to let you know that Pennsylvania, there we go. Let's take a look at this. Pennsylvania is pink. So 3.07% of income. All right. No matter what your income is, 3.07% of it is being paid. But again, look at this. Tax tables for several states married filing jointly. Okay. I'm going to let you know a lot of people I know are married and they still file separately because that's what gets them the most money. All right, this example, Hilda works as a nurse in Michigan and earns $4,250 for the month. Find the tax rate from the chart on the previous page and calculate the state withholding tax. Michigan has a flat rate of 4.25% on the income. So here you go, 0.0425 times 4,250. Hilda is being taxed $180.63 per pay period. Okay. All right. You okay with that, Anna? Okay. Find net pay when given gross wages, taxes, and other deductions. Gross earnings, FICA tax, Social Security, Medicare tax, with federal withholding tax, state withholding tax, and other deductions. Once you figure all those deductions out, then you finally have your net pay, or what a lot of people call their take-home pay. So I want you guys to be really familiar with this, because when you go out and you get what you're going to consider your career job, you don't really care about these deductions. What you care about is, what's my take-home pay? So even if they have to sit there and kind of have to figure it out for you, you tell them, here's my information. If I were to fill out a W-2, this is what I would put down on it. And sometimes, you know what, guys, you can already have a W-2 filled out and you just bring it into them and everything's blank on it except for what, what your stuff would be. Like, don't worry about your address or anything. Just have your name on it. Fill it out as if you were filling it out for any other job and say, come back with me and tell me what my net pay is going to be. Tell me what my take-home pay is going to be based on this information. And I'm telling you, if you don't like that amount, then you don't take that job. You guys are worth more than just minimum, okay? Here, let's look at this example real quick. Kizzy is married and claims 3 withholding allowances. Her weekly gross earnings are $643.35. Her state withholding is 2.5%, and her union dues are $25. Find her net pay using the percentage method of withholding. So here they went through and they found everything out. They added it all up, and then they're going to subtract it from her total pay. And you guys will have to do problems just like this. So make sure you set it up exactly the same. All right. I would do it more of a table. I wouldn't do all this writing. I would do FICA and then I'd figure it out. I would do Medicare, and then I'd figure it out. And you can have like 3 columns. So you have the tax name, the formula or the work, and then the amount. And then at the end of the amount, you want to total everything. Find the net pay by subtracting the total deductions from the gross amount. So per week, this person's taking home $528.48. All right. Okay. An employee's contribution to Social Security and Medicare must be matched by the employer. All right. Anna, did you need me to go back to 7 at all?
No, I'm good.
Okay. If the employees at Fair Oaks Automotive Repair pay a total of $789.11 in Social Security tax and $184.55 in Medicare tax, how much must the employer send to the Internal Revenue Service? So here's what I want you guys to get from this. You don't need to know the number of employees. You don't need to know how much each employee sent in. They gave you the totals. So the employer has to match exactly everything that was sent in. So all you have to do is add the amount of the employees and then you double it. Okay. Here's why, because the question said, see, now I disagree with that. The question says, how much must the employer send to the Internal Revenue Service? This part right here, this is all they should have to send in because that matches with the employees. Did they not tell us that the employer matches dollar for dollar? Isn't that what we read on one of the earlier slides? Somebody tell me I'm not crazy and I'm not making this up. If they turn in this amount, then that's literally them having to pay twice. Because here's what the employees paid. So then this should be what the employer pays. They match dollar for dollar. I don't know how they're getting told that they have to pay twice. You guys do some homework and let me know if it ends up working out the way these slides are telling you it's supposed to work out. So like overall, the total amount sent, okay, the total amount sent to the IRS would be this total. So their question's wrong. Their question said, how much must the employer send to the IRS? Oh. Okay. Because we as the employee, we don't have to send it per pay period. The employer sends it on, like they take it from our paycheck and then they match it and then they send it to the IRS. Okay. Do we all get that now after the first bit of confusion? So this is how much the employer is sending, but it's not all coming from the employer. The first half is coming from the paycheck deductions. The second part is being matched by the employer, and then all together is what the IRS is getting. Cool? Cool. All right. Almost done, guys. In addition to withholding the employee's Social Security tax and matching the amount paid by the employer must also send the amount withheld for income tax to the Internal Revenue Service on a quarterly basis. All right, so let's look at this one. The manager at a movie theater collected this amount from its employees for FICA tax, this one for Medicare tax, and a federal withholding of this amount. Compute the total amount that must be sent to the government. All right, I'll give you a few seconds to write that. So here's the employee FICA. It's matched by the employer amount. Here's the Medicare. It's matched. Here's the federal withholding. The federal withholding is not matched by the employer, so do not feel like you need to double that. And then here's their amount once they add it all up. Now, technically, they would need to do that every quarter. At the end of every quarter, they would have to figure out how much did the employees pay in FICA, how much do I have to match, and vice versa. And they should be sending that in every quarter. So remember when it said that the employers every so often are sending this in, it's every quarter that they're sending it in. The movie theater must send $10,397.20 to the IRS. Okay. Each quarter, employers must file a Form 941, the employer's quarterly federal tax return. This form itemizes the total employee wages and earnings, the income tax withheld from the employees, the FICA taxes withheld from the employees, and the FICA taxes paid by the employer. I believe that also includes the Medicare. Oh. The Federal Unemployment Tax Act requires employers to pay additional tax. This unemployment insurance tax paid entirely by employers is used to pay unemployment benefits to any individual who has become unemployed and is unable to work. Okay. Fringe benefits are extra benefits such as health care, dental care, retirement plan, contributions, daycare, life insurance, tuition reimbursement, sick leave, vacation, etc. Not every employer offers these. In fact, most part-time employers will not offer it. All right.